Hello everyone. Hello everyone. How are you all? I'm Dr. Lavi again with you with a new concept, financial reporting. It is today we are going to cover something related to section B. Okay, scenario based multiple choice questions. In between, I will change the some section A, section B, section C. In the previous videos, I have posted with respect to section C. Now we are going to do it section B. I kindly request you all to subscribe this channel, press bell icon, gives your suggestions and comments. That's very important, and share this among the friends or network who are doing ACCA. It will really help them to succeed. And in between, I will post for F7 financial reporting, F8 audit and assurance, SBR strategic business reporting, and next for the next exams I will post for F9 financial management and advanced financial management. Okay, so and you watch till the end, subscribe it, share it, and press the bell icon so that it will be notified to you as and when I post the new videos. And I kindly request you to post your comments. Very important. I expect that your comments will add value to my videos. Is that so that I will take that into consideration whenever what we are going to do is come back to this, that we are covering few of these concepts. Okay, few of these concepts today and in the next few videos. Consolidated financial statement, consolidation of profit and loss and OCI, accounting for associates, published financial statement, and statement of cash flow. Every session, every video will have only one scenario based question. I'm not going to take more than one. Is that short and very specific and effective? Fine. Where I'm going to cover the concepts, giving the background, and please refer to my theoretical videos related to this. First you go through the theoretical videos, then only it will be easy for us to understand this. Even while teaching, if there is any theoretical concept which has to be supposed to be explained, I will do that. Fine. Now in this session we are going to work on these specific areas as such. Fine. We'll remove this, nothing will happen. Now what is there is on 1st April 2000, dates are very important. 1/4/2007. They have acquired on when? They have acquired on 1/4. How much they have acquired? They acquired 116 million shares. Is it right? 116 million shares. And total is how much? Total shares are 146 million. 145 million. Means we have to know what is the percentage of share of group, okay, of the parent. 116 divided by 145, it comes to 0.80. Fine. They have acquired 116 million shares with respect how many total shares are 145 million ordinary shares. Immediately how much they say? They are talking about the cash is how much? Cash is 210 million. Is that? And they are talking in terms of a loan note. Is that? Loan note. How much is the loan note? They say that for every 200 shares, is that? For every 200 shares, one loan note. Is that? One loan note. How much is there? 100. For 116 million shares. Is it right? For how many loan notes? 116 divided by 200 times 100, it comes to 58 million loan notes. Is that 58 million worth of loan notes? But at the date of acquisition, automatically, see, don't waste time. Time is very precious. Immediately, the moment you are doing, first time you read the approach is first time you read the scenario. Second time, wherever it's possible, you just do the calculations immediately. Time is very important. 1.8 minutes per question. At the date of acquisition, branch owned subsidiary. Okay, subsidiary, how much is they own a recently built property that was carried at a depreciated construction cost, depreciated value 62 million. The fair value of the property is how much? 82 million. Estimated for how many years? 20 years. Is that? Means what is the fair value difference? Is that? What is the difference? Fair value difference is how much? 82 minus 62, it comes to 20. Okay, we will cover this. Fine. Branch has also internally developed brand which has been valued for how much? 25 million for 10 years. Fine, we'll do that. The inventory of the branch 31st March 2009 includes goods supplied by Root Company for a sale price of 56 million. They have add up a cost of how much? Markup is how much? See, what is the cost? Cost is 100. Markup is how much? Markup is 40%. It comes to how much? 140%. Fine. Now for 140, what is the selling price? Selling price is how much? Selling price is 156 million. Okay. Selling price is 50. For 40 of unrealized profit, is that unrealized profit? Percentage of unrealized profit. What is the value? Is it 40 divided by 140 times 56? It comes to how much? 40 divided by 140 into 56, it comes to 16 million. Fine. Now that's as simple as that. Now, how much is there? We have now. See, these are the how many scenarios there? 1, 2, 3, 4. Is it right? See, you plan it. Yeah? You divide the things. What is the total amount of consideration transferred by Root Company? Fine. How much is the cash? They gave you cash how much? They gave you cash of 116 million. Fine. They gave cash of how much? They gave of 116 million. Plus they gave a loan stock. Is it right? They gave a loan stock. How much they gave a loan stock? They gave a loan stock of how much? They gave a loan stock of 58 million. Fine. They gave a loan stock of 58 million. From where we got 58 million? We got 58 million from here. Is it? From 58 million from here. Now how much is there if you take it into consideration? How much is there? Cash is how much? Sorry. Cash is how much? Cash is sorry. Cash is how much? Cash is 210 million. Okay. Cash is how much? Cash is 210 million. Sorry. Is that how much is it? 268 million. Yeah, cash is how much? 210 plus 58, it comes to 260. Now, fine, that's good. What is the amount of adjustment for the group retained? Group, they are asking only for the group, is it right? In respect movement of the fair value adjustment. What is the movement is there? How much is the movement is there? Movement with respect to properties, how much? Movement with respect to properties is 82 minus 62. Is it right? How much is the movement? 20. Okay, 20 million. Is that? For this, and for this you have to take the decrease in value. Is that? See, one side we are talking in terms of depreciation. One side is that how much is that? 20 million dollars divided by 20 years into 2 years. Why it is 2 years? See, we have taken it on 1/4/2007. We are preparing on 31st/3/2009. Is it right? How many years are there? 2 years. This is the date of acquisition. Is it right? This is the date of acquisition, and this is the date of reporting, date of preparation, date of reporting. How many years are there? 2 years. That is the why we have to take the 2 years into consideration. How much is there? It comes to 2 million. Now, with respect to the what they say, branch has an internally developed brand is there, right? Brand. For the brand, what happens? We have to take the amortization, intangible assets. Fine. Directly that is how much? 25. Fine. 25 divided by how many years? 10 years. Time how many years? 2 years. It comes to how much? It comes to 5. Total it comes to 7. Fine. Now, what they say adjustment is there. Fine. Adjustment is there. What when you are doing the adjustment, how much is there? How much is there? It is 7 million. It is a group. So what is the share of the parent company? Share of the parent company is 80%. It comes to how much? 5.6 million. Okay, it comes to how much? It comes to 5.6 million. Now, what is the unrealized profit? We have calculated unrealized profit, is it? We have calculated unrealized profit. How much is there unrealized? Again, don't take that. We have calculated here. How much is there? It is the 16 million. Is it right? They say portion of unrealized profit. Fine. Portion of unrealized profit. PURP per. Portion of unrealized profit. How much is the portion of unrealized profit? Portion of unrealized profit is 16 million. Fine. Portion of unrealized profit. See, this is the way. Again, I'm saying, this is the portion of unrealized profit is how much? Portion of unrealized profit is 16 million. Right? I'm going to put one arrow here for your understanding. Fine. Next, what is the drag? What is the drag and drop of available? How should see one unrealized profit will often happen? See, inventory is an asset. Is it right? Inventory is an asset. To increase the inventory, we have to make a debit. Is it right? To decrease the inventory, we have to make a credit. Is it? Now, what happened because of that? They have not sold it. Is it right? It is an intergroup company sales. Is it? When that is the case, what we are doing? We have to credit the inventory. Is it? We have to credit the inventory. You have to drag here inventory. Now, what is the corresponding? We don't have NCI, all those things. Is it? The corresponding element will be what? Where we are doing this adjustment? We are doing this adjustment in the cost of sales. Right? We are doing the adjustments in the cost of sales as well. Okay? This is with respect to, see, debits and credits are very important. People, if you are good in debits and credits, done for the, you will just go, it's a walkthrough, isn't it? It's a piece of cake, as simple as that. Branch has recently lost some large contracts and the directors of Root are wondering if branch company can be excluded from the consolidation. Which of the following situations would allow a subsidiary to be excluded? Following situations. See, you have lost the contract. When you have lost the contract, it means you have lost the control over the revenue. Is it right? You have lost some large contracts and the directors are, if can be excluded. Yes, we have to exclude. Is it right? When we have lost the contract. Now, the activities of the subsidiary are significantly different to the activities of, no, that is not the case. Whenever there is a acquisition, whenever there is a group, there is no precondition that only in one type of issue you will have horizontal, you will have vertical. Is that you will have this? See, now that's what conglomerate. We use the word conglomerate. Is that? We are going to the conglomerate. If that is the case, what we are doing, we have mergers across, we have mergers the vertical and horizontal. Is that there is no condition that the activities of the subsidiary are significantly different. It is not workable. Control of the subsidiary has been lost. That's very important. When you are losing the contract, your control will also be lost. You have to exclude it. Control of the subsidiary is only intended to be temporary. Is it? It's not. See, that's not a temporary. Once you are taking the acquiring, it will be see, once you are losing the contract, it is permanent. Okay, it's not a temporary that again you will come up. The subsidiary operates under long-term restrictions, which prevent it from transferring funds to the parent. No, there is nothing like long-term or short-term restriction. There is nothing like there is any Any restrictions will be there. The answer is what? The answer is control of the subsidiary has been lost. Is it? Control of the subsidiary has been lost. This is the way we have to take into consideration. Are you clear about this? Next. Fine. Just go through it. When the next one. Okay. Again a small one. Okay. Again a small one which will help us to understand the this is related to parent and the subsidiary. On November 1st, 2004, Port purchased 75% of Alfered for how much? 650,000, and consideration was how much? 35,000, $1 equity shares with a fair value of how much? Means they have 650,000. Is that they have paid how much? How much is there? 35,000. The balance is how much? 615,000. It is premium. It is a premium. Fine. See, now that you should see, that's the reason you have to be very, very quick. Now I am saying, because we have to be very, very quick, we have to be concepts very clear. You refer my lectures, theoretical lectures, that gives you a complete understanding. Before coming to the calculations, make it sure that where I have explained the concept with supporting examples. Fine. At the end of the day, subscribe the channel. That's very important. This is my request. If you want to do some favor to me, you subscribe to this channel, so that share this channel and subscribe to this channel. Fine. Noted below are the extracts of the draft statement of profit and loss account subsidiary for the year ended 31st November. See the thing, dates are very important. 1/11/2004 and 31st 12/2004. How many months? 2 months. Okay, 2 months. This is the most. We will don't focus on that. We don't focus on that. We have to be very, very specific on this. Fine. We have to be very, very specific on this. Along with the draft financial statement of financial position, they gave us the profit and loss account, and they gave us the statement of a financial position. Fine. Extract. They gave you the extract. Fine. Port has not accounted for the issue of own shares for the acquisition. Port has not accounted for issue of its own shares or for the acquisition of investment in Alpha. They have not accounted anything. Use drag and drop option. Show the balance on the share capital. See, when you say it is a drag and drop option, we have to do first calculations. Fine. We have to do first calculations as such. Now, how much is the share capital and how much is the share premium? Is that how much is the share capital and how much is the share premium? Fine. How much is the share capital? See the thing. We are talking about the share capital of how much? Share capital you show the balance of share capital and share premium as a 31st December 2. Means we have to show the consolidated one. Fine. You have to show the basically with respect to when we are doing this, we have to show with the parent one. Fine. We have to show how much is for the parent. Port is how much? Port is how much? Port is the share capital. Share capital is how much? Share capital is 200. Fine. Share premium is how much? Share premium is 500. Fine. They have done for new issue. Is it right? They have done for new issue. How much is they have issued? How much? They are 650. Is it right? 650 they have. Now in 650 we have done. Is it right? In 650 we have done. We have done in the here. It is there. See the thing. We have done. Is it right? How much is the share? Equity shares is 35,000 and share premium is how much? 615. Yes, share is how much? 35,000. It is in thousands. And this is how much? This is 615. Is that what is the revised one? revised one is 235 and 1115. Fine, 1115. Right? Now how much is the what is the share capital? Share capital is 235. Okay, share capital is how much? Share capital is 235 in thousands. Okay, in thousands. And how much is the share premium? Share premium is 1115. Is that 1115? These are the okay, 1115. I am putting with color so that you will not get any confusion. Okay, will not get any confusion. Right? What is the net assets? Okay, what is the net assets of? What is the net assets? How much is the net assets at the of Alfered? Is that how much is the net assets of Alfered? Alfered is how much? See the thing. Yeah, Alfered is how much? See that net assets. You have they take the accounting equation. We don't have assets, but take from the net assets are what? Assets minus total assets minus current liabilities, or you can take it at from the shareholders fund. Fine. What is that? You have 100. You have 100. You have 85. Is that? You have 100. You have 85. Plus you have the retained earnings 331. Is that? And you have something profit for the year. Here you will get. You have to be very considerate for how many months? 2 months only. Is it? You have to take 2 months only. Now, what happens here? Yeah, what happens here? I'll put it here. Next, net assets at acquisition. How much is the share capital? Share capital is 100. Is it 100? 100 in thousands. Is it right? In thousands. Next, what is the share premium? Share premium is how much? Share premium is 85. Okay. Next, how much is the retained earnings? Is it? Retained earnings are 31 and profit for the year is how much? 96. Is it? Retained earnings are how much? See, I will do it with a different one. Retained earnings. Retained earnings are how much? Retained earnings is 331. From this, profit for the year. Profit for the year. Is it how much? 96 into 2 by 12. Why we are taking 2 by 12? It is from 1st November till 31st December. Only 2 months. Okay. How much we'll get? How much we'll get? We'll get 16. Is it? Minus 16. It comes to how much? It comes to 315. If you put the total, is it? If you put the 0, 1, 1, 0, 1, it comes to how much? It comes to how much? 500,000. Okay. The accountant is finalizing. Any doubt is there, just put it in the comment box. I will reply immediately. That accountant of port company is finalizing the consolidated financial statement. Which two of the following statements are true? These are the keywords regarding consolidated financial statement. The non-controlling interest share of profit is part of consolidated. The NCI is part of consolidated statement of profit and loss account. Yeah, we will take that into consideration whenever we have to show it separately in the profit and loss account. Goodwill on acquisition should be amortized over a period of there is no condition of amortizing. There is nothing until it is stated. Unless and until it is stated. Fine. If a subsidiary is acquired during the year, its results are apportioned over the years of acquisition. Acquired during the year, the results are apportioned over the year. See what we have done here, what we have apportioned what we have apportioned for 2 months. See the thing, this is where they will test us. They will test us the theoretical concept and its application. Is that what when they have acquired on 2007, is it right? They are acquired on 2004, is it right? First level, and we are preparing on 31st December 2004. Means how many months we are taking? We are taking into consideration 2 months. Only the group share of subsidiary NCI is shown in the, no, we will not take only group, is that we will consider, see what we will do here, NCI, non-current assets, we will take the group as well as we will take the subsidiary. We will total both the values, is that we will take the both the values as such. Thank you. Yeah, fine. Now, what is the amount of group gross profit for the year? What is the amount of group gross profit for the year? What is the profit of the parent and what is the profit of the subsidiary? First we will go through what are Port and Alfered. Okay, what is the Port and Alfered? Port is how we are not doing any changes to the Port, is it right? How 364 and 330, is it 364 and 240, is it 364 and 240. 364 will take directly, is it 364. 240 what will take? Will take for 2 months, 12 months. Only for 2 months we are taking, is it right? We are taking only for how many months? 2 months only. If that is the case, how much is there? 240 into 2 divided by 12. 240 into 2 divided by 12, it comes to how much? It comes to 40. 404. Outcome, it comes to 404. Hope you are understanding. Okay. Any feedback? I wish. And if subscribe to this channel and share this channel. Fine. 404. What is the group retained earnings? See, we see, keep it in mind. If this makes really interesting, right? This makes really interesting. What is the Port? What is the Port and what is the Alfered? What is the Port and what? The Port retained earnings are how much? Retained earnings are how much? Take into consideration. What is how much is the retained earnings? Retained earnings are 2,900. Okay. Here it is how much? 331. Is it right? Retained earnings are how much? 2,900. And if I retained earnings are how much? Retained earnings are 2,900. Post acquisition, what is the group retained earnings? Is that post acquisition? Because the subsidiary share will go to NCI. Okay, the subsidiary share goes to NCI. The group retained earnings takes into consideration the post acquisition profits also. How much is their post acquisition profits? Post acquisition profits is 96. Is right? Post acquisition profits is how much? 96. Into for how many months? 2 months. Is right? Into how many months? 2 months. How much it will get? It will get 16,000. Is right? This is also in thousands. This is also in thousands. Fine. It comes to how much? 16. Is right? It comes to how much? It comes to 16. Now in this 16 share, is right? In this 16 we have to take the share of Alfered. Yeah, share of Alfered. How much is there? Share of Alfered company from whom? From Port point of view. Is that how much it belongs to the Port? Is that how much is that? they have 7, it is going to be 75%. 16 into 0.75, 16 into 0.75, it is 2,900. Okay, it is 2,009 in thousands. Fine, it is 2,009. It comes to how much? It comes to 12. It comes to 12. How much is there? 2,912. 2,912 in thousands. Okay, in thousands. 2,912. Okay, this is the concept which is going to be done. Okay. Now this is the way we have done two questions. Is that we have done two questions. First, you have to read the scenario and appropriately make it a point how it is going to be worked it out. Hopefully you understand this. If you find any doubt, then you revise it. Is that if you have any doubt, you can revise. You can see the things again and again. If you have any further questions, you are just post it in the comment section. Thank you so much. Again, once finally, like it, share it, subscribe it, and press the bell icon for any notifications. Thank you so much.